All right, boys and girls, the ETF is coming any minute now. Any day, it's inevitable. And yeah, I'm just tired of talking about it. I know you're tired of hearing about it. And really, it looks like the price is tired of hearing about it as well, because we've just been exploding sideways right along with the sentiment. Like I said a couple weeks ago, maybe the ETF reached its peak of its hype cycle, really. I mean, it can't get much more bullish unless this thing actually gets approved. And most people aren't expecting it to be approved during the holiday season, and it's probably not going to happen until around January 10th. But whenever it does, it looks like hopefully we're going to be breaking out of this bullish flag right here. And if you only consider this to be the flagpole, then that would give us a conservative price target of around $46,000, and that would be the new higher high that we need. If you zoom out here to the 4-hour chart, though, you might actually say that this is the flagpole all the way down here. And if that's the case, then maybe we're going to see a breakout even higher than that, all the way up to about $50,000 here, or 48,102 according to this line right here. But either way you put it, we've got a pretty bullish looking chart right here, and I think whenever we finally get this ETF approved, we're going to be seeing another leg up for our extended gains. Apparently, the SEC has just met with all Bitcoin ETF issuers and told them to remove any reference of in-kind redemptions from their filing. Cash creates only. According to Investopedia, in-kind redemptions are non-monetary payments made from securities or other instruments. Rarely used in the mutual fund industry, in-kind redemptions are common with exchange-traded funds or ETFs. Fund managers may feel redemptions hurt long-term investments. Therefore, instead of paying out cash to those who wish to exit a fund, they prefer to offer positions in other securities on a pro rata basis. If I understand this correctly, this would mean that if it was in-kind redemptions, you would be able to actually exchange your ETF for Bitcoin, or you would be able to go and take some actual Bitcoin and give it to BlackRock and get some ETFs for it, but I don't see why you would want to do that. According to this article on Fox Business, the cash create route means that ETF issuers will have to exchange Bitcoin for cash on every transaction, a longer and more complicated process that requires issuers themselves to buy Bitcoin, not the broker-dealers. In other words, you would have to cash out of your ETF in order to go back into Bitcoin or something like that, and that means that it is going to be a taxable event. It goes on to say, securities lawyers say another disadvantage of cash creation is that investors would be robbed of an important tax advantage. In-kind purchases are not a taxable event, but selling Bitcoin for cash before the ETF purchase would be. In other words, what it's saying is do not sell your Bitcoin for cash and buy the ETF. Why the hell would you do that anyway if it's supposed to be a spot ETF and it's going to follow the price of Bitcoin exactly anyway? Like I've said a million times on this channel, the best route to go is cold storage, because that means that you're actually the bank and you're going to be the one in control of all of your cryptocurrency. That way, these big institutions can't use your Bitcoin to manipulate the price and rob you of all of the profits. If you thought that this meant Gary Gensler was done with his attacks against crypto, well then you were wrong, because he had this to say recently.
There's a lot of non-compliance with the securities laws that are there to help give you the disclosure so you can make the investment decision, but also to protect you against fraud and manipulation. And there's been far too much fraud and bad actors in the crypto field. There's a lot of non-compliance, not only with the securities laws, but other laws around anti-money laundering and protecting the public. This is really the Wild West, and it's around the globe. I would say, again, this is a small part of our U.S. capital markets, but it can undermine confidence when so many people have been hurt, and all they can do is then stand in line at a bankruptcy court. And it's not just one actor, and it's not just, oh, it's just a few bad actors over here. This is something that pervades a lot of this field globally, and it's hard for the good faith actors even to compete.
They're continuing with their attacks against cryptocurrency, saying that it's only used for money laundering and for hucksters and fraudsters, as he likes to say. But the number one currency in the whole world that's used for money laundering and illicit activities is the US dollar. And traditional markets haven't been very welcoming to retail investors either. I know some of you may have been invested in GameStop during the last bull market, whenever all of the trading was shut down on Robinhood and you were robbed of all of your profits. Well, that's exactly why I said that you probably want to keep your Bitcoin on an actual cold storage wallet instead of an ETF. But it kind of nullifies his argument a little bit because criminal activity and scam artists are just something that revolve around money markets in general. Wherever there's money to be made, there's going to be criminals and scam artists trying to rob people of their hard earned money. Luckily, with cryptocurrency, all of that is going to be on the blockchain and it's going to be a lot easier for them to sort out. So if the SEC and the government are really worried about investors, then I think approving a Bitcoin ETF is just the right thing to do, and I hope they get it done with soon. Luckily, though, Gary Gensler did get called out by Community Notes, and they said that crypto companies like Coinbase, a public company that the SEC oversaw the listing of, have been trying to gain clarity on SEC guidance for compliance over the past few years. The SEC hasn't taken a clear stance and has relied on regulation by enforcement. It's good to see that at least the community knows how full of shit these people really are. It looks like they can't hide the fact that an ETF is right around the corner any longer, though, because these ETF issuers have started to put out crypto ads, with 3 being released in the last 48 hours, according to this article on Cointelegraph. I showed you guys this Bitwise ad with the most interesting man in the world, but here we have another one by Hashdex, and then it says here that Bitwise then responded with another short ad featuring Goldsmith on December 20th. So it looks like we got another Bitwise commercial, and hopefully we're going to see more rolling out from the likes of BlackRock and others really soon. Apparently the bears are still holding out hopes for a $12,000 Bitcoin, as this article by Cointelegraph says, Capo of crypto is still calling for a $12,000 price target throughout the whole year. I'm sure you guys have heard of Capo. He's been getting roasted all over Twitter for basically the whole pump that we've been seeing all year. And it says he's stubbornly refusing to believe the enthusiasm around the crypto 2023 renaissance, and he now believes that a doomsday scenario lies right around the corner. He says it's probably forming a local top around $40,000 to $45,000 right here. But from what I understand, he's been saying that basically we were going to top out at $20,000 and then $30,000, and he just keeps moving his price targets up and up and up. Bitcoin could always have a retracement, but I really don't think we're going back down to $12,000. Only time will tell, though. And China's not going to be missing out on the action. According to this article on CoinDesk, spot crypto ETF applications will now be considered in Hong Kong, regulators say. I was talking about how Hong Kong was going to start letting people trade crypto again, and how it was going to be a backdoor for the mainland. We saw China try to crack down on crypto trading at the end of the last bull market, and everybody said that they banned crypto altogether. But now as they start to adopt cryptocurrency technology all over again, I think this could be one of the catalysts that sends us exploding for the next leg of this bull market. And hopefully they'll start getting some of these ETFs approved right after we do, so that all of those billions of people in China can start multiplying our gains. Speaking of gains, here we have an article about Solana. And if you didn't know, Solana has been on an absolute tear recently, pumping over 40% in just the past couple of days. According to this article, the market cap has flipped XRP, and I'm pretty sure it also flipped BNB for just a minute yesterday, if I'm not mistaken. And according to CoinMarketCap, it looks like it's still just within about $1 billion of flipping BNB all over again. This will make Solana basically the number 3 coin of cryptocurrencies by market cap if you don't include Tether, because it's a stable coin. This article says that Solana's rally is backed by increased DApp activity, and as the bull market does come back and gas fees continue to run out of control on the Ethereum network, I think Solana is going to pick up a huge market share, because people are going to be looking for alternative ways to trade NFTs and stuff without paying more in gas fees than they're actually paying for the product they want. Let me know in the comments if you guys are interested in any layer 2s on the Solana blockchain. Me and the boys over in the Discord have been having a real good time ushering in this new bull market, and we would love to hear some of the projects you guys think are going to be doing real well in the next leg up. So go on over to the Discord, there's a link down in the description. It's going to be a really wild ride over this bull market, and I can't wait to go on the ride with you. Thank you guys so much for watching, and don't forget to hit that like and subscribe button. But most importantly, don't forget to have a wonderful day. I'll see you guys next time. Bye.